I'm Ross Mayfield, investment strategist at Baird, and we are back for another weekly update with our friends at Strategas. Today, we are lucky enough to be joined by Managing Director and Washington Research Analyst Jeannette Lowe. Jeannette, how are you doing today?
Well, Ross, how are you?
I'm doing really well, thanks. Kind of two big things that I think we could use this time to cover. The first being this is Wednesday, November 5th. The Supreme Court has started to hear oral arguments around the administration's tariff policy. So I know you all have had a couple big takeaways and things that investors need to know about this. I just want to turn it over to you and get your stance on how things might go from here.
Yeah, I mean, as you mentioned, this morning was oral arguments at the Supreme Court on this case, and you're going to have a lot of talk in the press and amongst other investors talking about whether or not the tariffs are going to be overturned and whether or not the Supreme Court justices were skeptical of the Trump's use of IEEPA to impose tariffs. But our really big takeaway is that the Supreme Court case is deciding how Trump can impose tariffs, not whether he can actually do so. So let's just say that the Supreme Court does decide to overturn Trump's tariffs. The administration has a backup plan. It will be more cumbersome, but they will basically be able to impose the same tariffs they have in place now within a few months. So immediately, this will be a two-step process. First step is immediate. They can impose tariffs under Section 122. That puts in a 15% tariff immediately for up to 150 days. While that tariff is in place, then the administration can do step two, which is to initiate Section 301 investigations into every country about whether or not they have unfair trade practices. And at the end of those investigations, they will likely find that the same tariff rate that currently is applied on those countries should be reapplied. So basically, if the court rules to overturn the tariffs, we could have some short-term policy uncertainty with regard to trade as this plays out, as the White House implements its backup plan. But we're thinking about the fact that if you look a year out, we are still essentially going to have the same amount of tariffs now, then that we have now. So it's not a whole lot is going to be changing. It's just about the process and what authorities they can use. Now, we may not know the decision until the first quarter of next year, but of course, the court also doesn't have to issue its decision until June. So there'll also be this will kind of have a little bit of an overhang in the market as well.
Yeah, but this is very important because you'll get a lot of news stories and a lot of takeaways, especially if the tariffs are ruled illegal. But as you mentioned, if the ultimate landing place is about the same, then investors need not waste the energy that could be allotted to it. So, really useful update there. The second update is kind of in the same vein, something that's going to be very noisy in the near term, but might have a different long-term implication, which is we're now, in this shutdown, one of the longest on record. Starting to hear a lot about consumer strain and SNAP and the labor market weakness. But that buttresses against your all's call for a consumer tailwind heading into 2026. I'm wondering if you could expand on what you're seeing there a bit and what might be the catalyst next year.
Yeah, absolutely. So as you mentioned, this is now the longest shutdown that we've ever had. And usually shutdowns on average are only 8 days. We are now over a month on this one, and we probably have a few more days to go before it actually gets resolved. But usually shutdowns are not big economic events. It's a delay in timing for when the economy reopens and essentially all of that activity comes back. But given the fact that this time we are in a longer period of a shutdown, there is more of a concern that we could be hitting a soft patch in the fourth quarter. And the fact that there's also withholding of SNAP payments, this is food assistance, especially for the low income consumer. There's a little bit more worry about what will happen to the low end consumer who has been struggling this year, given these other external factors. However, one of the things that we are quite focused on is that once we get into 2026, there is a lot of fiscal stimulus coming. There's about $150 billion worth of consumer stimulus coming in the form of tax refunds next year. So this will be distributed in the February through April tax refund season, and it's going to be quite significant. It's a 44% increase from what we saw last year, and it will particularly help the low-end consumer as well as the middle-end consumer as well. But we do want to point out that if we can get through this soft patch, there is a lot of fiscal stimulus as well as monetary stimulus coming into the economy in 2026, and it should be a pretty positive boost going forward.
Yeah, absolutely. And on top of that, the potential for more rate cuts and some other tailwinds for the consumer. So really important to focus on 2026, even if this fourth quarter turns out to be a bit noisier than expected because of the shutdown. Jeanette, Very insightful as always. Thank you so much for the time, and we'll look forward to talking to you again soon.
Awesome. Thank you, Ross.